Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 9th of April. I'm Daniel Lam, your host for the podcast. The most notable development over the last 24 hours is the ratcheting up of the tension between US and China, with US announcing an additional tariff of 50% on Chinese imports after Beijing's retaliation to the Liberation Day tariffs. The build-up to this news took the dollar CNH from 7.25 to 7.43, and upon confirmation of such, took the dollar CNH back to just below the 7.4 level at the time of the making of this podcast. Now, the difference between this depreciation episode is different from 2018 trade war, because at that time the US dollar was strong, and this time the DXY is still on a downtrend. This depreciation move in the CNH reflects the deflationary issues the Chinese economy is facing, as well as the trade pressure. So in light of all this, it is quite reasonable to expect an acceleration of fiscal stimulus to be coming from China, including measures to be front-loading the stimulus on consumption, as well as talks about state-owned funds buying stocks in order to stabilize the markets. Now, taking a step back, the Hang Seng Index, upon the time of the creation of this podcast, is just over 19,500. It has nearly given up all of its gains this year, falling from the intraday high at 24,874 after rallying from the intraday low at 18,671 since the middle of January. Now the VHSI, which is the short-term volatility measure of the HSI, has gone to levels last seen during the outbreak of the Russian-Ukraine war. For the long-term investors, it is reasonable to be looking at the Hang Seng Technology Index. It is cheap, back at -1 standard deviation below its long-term price-to-earnings valuation range. We continue to believe DeepSeek is a major positive fundamental factor. Right now, the technology stocks are beaten down because of trade issues, but any positive uptakes on the negotiation front can help turn sentiment around. Now, an observation from the US front: the derivatives market is pricing in negotiation as the outcome. In the S&P 500 options market, the short-dated volatility in the US is much higher than the long-dated volatility there. So this is what we call an inverted term structure, suggesting that investors believe that the trade rhetorics will be toned down beyond the very near term. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.